Where's your confidence level? Was that the bottom?
Oh, hopefully it was the bottom. We have seen, well, first off, thanks for having me. And we have seen a lot of extreme data in between the VIX, between credit spreads, a lot of stuff. And markets can't stay at those extremes for a very long period of time. And we saw sample evidence in terms of the false rumor that circulated a couple days ago and moved 5 trillion in 10 minutes or so. We saw a market primed to want any hint of good news in order to stabilize in there, because markets like this that come down short and sharp in reaction to basically new news, because this wasn't the breaking of a sector, this was an intentional policy move that shocked markets. And when we've seen examples like that before, the 1987 crash, the 1998 the Asian currency crisis, and most recently the pandemic, when they come down on things that aren't broken in the economy, they tend to come down short, sharp, and then reverse pretty quickly as well. So markets were definitely primed to want to do that, but we'll see how it settles out going forward.
Well, especially considering, Carol, that it's not clear what actually will happen over the course of the next 90 days or what happens beyond that time window. And already, even prior to today's announcement, we saw companies and corporations having to make decisions around just the expectation that tariffs could be implemented. Walmart, for example, suggesting they were prepared to eat potentially the margin hit in order to stay competitive. Delta pulling guidance. Amazon, according to our reporting, canceling orders of inventories on goods from China. How much could this have already altered corporate behavior and therefore what we're going to see in corporate earnings, even with this pause now in place?
I think that's a really important point, because one of the things we've been pointing out to our investors is that there are some important hallmarks like that in terms of the way businesses were already trying to structure themselves. But the biggest issue that we've heard about repeatedly was that lack of clarity. Now, I'm not sure a 90-day pause gets them any more clarity, but there have been repeated signals that, you know, the initial levels put out there are as bad as it gets unless you retaliate. So hopefully they back off from then. As investors, we'll have a great opportunity in the next few weeks to month and a half, as companies are reporting earnings, to really probe during those calls and find out what have you done, what are you doing, how are you structuring. Doesn't mean we're out of the woods yet for those companies, and you saw it too with Delta this morning pulling guidance. It's very reminiscent to what happened going into the pandemic, when most companies pulled guidance, furloughed instead of laid off workers, and really prepped for what life would look like on the backside of the pandemic whenever that came. And you've got similar going on here, which is really important, because the resiliency that our companies in the US have shown time and time again with what they've been dealing with in the last decade, from pandemic to port strikes to messed up supply chains and just a whole host of things, and they keep coming out on top. And so we'll get lots of good messages, I think, or at least hints in terms of what companies are able to do, because at least now the surgery's over and we're in the recovery phase.
We heard from the president a couple of times today, Carol, had this response regarding volatility in the bond market. Listen.
I was watching the bond market. The bond market is very tricky. I was watching it, but if you look at it now, it's beautiful. The bond market right now is beautiful. But yeah, I saw last night where people were getting a little queasy. I think everything had, well, the big move wasn't what I did today. The big move was what I did on Liberation Day.
He saw 4.5%. Speaking of queasy, but Carol, in light of today's successful auction, the movement in interest rates, how long will this market stay beautiful?
I think the bond market is something that we're all going to have to monitor very carefully for a variety of reasons. One of them is the fact that we are running huge deficits and debt in the United States. And a second one is, as a trading partner, as an investment choice, that we've thrown that into question in terms of reliability there. And is the U.S. truly a risk-free asset or worthwhile? And so you've got a lot of evaluation and reevaluation going on globally, into the extent that the Japanese or the Chinese in particular would start pulling back from our fixed income markets. It bears watching, but you might have some demand coming as investors per se have stayed very short duration for a very long period of time. And if they see those yields pop back up to 4.5%, 5%, especially if we can keep a lid on inflation because the tariffs don't end up being as bad as anticipated originally, you might see some interesting investment opportunities there.